Again, this week, the dominant story was Iran, and everything else kind of moved around that. Oil prices did start the week near $90 a barrel, but ended the week around $85 at their lowest level in 2 months, at least as of this morning. And the reason rates haven't really improved more than they have is kind of the same reason they've been stuck for weeks. Strait of Hormuz is still effectively closed, and until there's a real deal, there's kind of a ceiling on how much things can improve. And the situation did evolve throughout the week. Early on, the US and Iran were trading strikes, and Trump threatened more attacks if Iran didn't come to the table. Markets actually moved oil lower on that news, which kind of sounds counterintuitive, but the thinking is that this kind of force might be what actually ends things faster than diplomacy would. And Trump also confirmed the U.S. ran a covert operation over the last month to help over 200 commercial ships navigate that strait, and that carried more than 100 million barrels of oil. Then last night we got the clearest signal yet that a real deal's on the table here. Trump called off additional strikes after saying an agreement is very close and could be signed this weekend. And the reported terms would basically include a full reopening of the Strait of Hormuz without tolls and a 60-day ceasefire extension to work toward a permanent resolution. Uranium enrichment doesn't appear to be part of this initial deal, and that's really been the main sticking point, so I'm not really sure how far this will progress until there's an agreement on that. But the market does seem to believe this time is different, which is what pushed oil down to that 2-month low today. On inflation, PPI, which is wholesale inflation for May, came in at 1.1% month over month. That is hotter than expected, but April was revised lower, which kind of made it more bearable. And the bigger driver that's kind of worth calling out is that a large chunk of the increase came from portfolio management fees, and those jumped almost 5%, but that's not real inflation because financial advisors aren't charging more. Their fees went up because stock portfolios went up, and the fees are a percentage of that, so people are pretty happy to pay it. Core PPI, which strips out food and energy, actually came in cooler than expected. Then separately on wages, the Atlanta Fed trackers showed wage growth decelerated a little bit. Job stayers, which is 90% basically of the workforce, are seeing wages up about 3.3% year over year. That's decent until you remember that CPI came in at 4.2%. So basically wages are growing, but they're not keeping up with the increase in what things are costing. And there was a housing market data point worth sharing with buyers and sellers. Home values nationally were up about 0.25% in May, and values rose in 90% of markets. On the other side, new listings did fall last month and are down year over year. Homes seem to be taking a little longer to sell, and price cuts are happening in nearly 1 of 4 listings. Let me know if you need help there with improving affordability. But the market has stalled a bit, but again, it's not crashing. And that said, the urgency that sellers were experiencing about a year ago seems to have faded, at least when looking at nationwide numbers. But next week, we're going to get the first Fed meeting with Kevin Warsh as chair. There's no rate move expected, but his press conference and how he positions himself, as well as the Fed stance, will be the most watched event of the week. And we're also going to get retail sales and weekly ADP numbers. And of course, Iran developments over the weekend and next week could move things even before Monday morning when we open. But I'll see you next Friday to let you know what's impacting rates.